Hi, welcome to the Market Alert for Friday, 2nd of September 2022. So, yesterday we see a late date panic bid as it rescues stocks from the worst losing streak. Dip buyers apparently stepped in and bought ahead of today's non-farm payrolls numbers, which will be out later today. US stocks paired opening losses finished mixed after firm ISM data, while focus shifts to the NFP numbers. And the dollar prints fresh peak as US data diverges from ROW. So let's have a look at the news, and the main one today. There's no point looking at anything else. This is where the focus is going to be. Now, just to bring to your attention this 295, Goldman put out a statement yesterday saying that if it's 100,000 or less, then you can expect the market to absolutely move to the upside in a vertical fashion. So this number will be very interesting today. If it comes out anywhere near what we saw before at 528,000, which beat, I think it was 300 and something where the forecast was, then we'll see the market crater. But this is going to be a very important news item at 1:30 p.m. during today. Gold-silver ratio is sideways as the price of gold and silver stabilise a bit. Gold giving up a bit more and silver gaining slightly there, but still they're heading towards that 100,000 level. 100 level. It's Friday. I'm tired. It's been a long week. Okay, let's move on. Have a look at the Dow. So yesterday we see the market buying coming in as we traded through the 62% retracement from the last major swing. Market holding there at the moment, still below the 5-bar moving average. It's going to be interesting to see what the market does this morning though, and into the mid-morning waiting for that news. Yesterday the Dow sold off initially and then just moved to the upside. May have been some support there from the plunge protection team as well, after having so many down days, which you can see there that they wanted to just try and hold the market. Market is traded up more or less to yesterday's high, showing a bit of weakness there at the moment, but it'll be interesting to see what it actually does prior to the release of the non-farm payroll numbers. At the moment they're in a sideways range, and you can see that we've come back to 78% retracement there. We were oversold, we rallied up and now overbought. So a bit of a pullback there required in the 30-minute Dow. We've got the DAX opening shortly with the futures, but the Dow there needing to pull back. So somewhere back to the line that we've already got there. Watch the DP as well if the market continues lower. And in between this, we've got the 50 EMA as well. In the DAX, well, we've got a bit of a cluster of volume over the last few days, showing a bit of strength there. We're back to 89% retracement in this market from these lows. Let me just draw in a few others for you as well, because what's interesting here is that we converged with more or less two 89% yesterday. One here, let me just remove these, and then one from the swing, the main swing there. So you can see we hit the first 89 there, not quite hitting the second 89. In the 30-minute charts, you see we had a sell-off to start with. We had a bounce to the 20-bar moving average before becoming oversold again, and then we moved down and we double bottom there, and we saw the volume kicking in nicely there as well as we became oversold, and then the market rallying all the way back. Overnight prices are at the high and trading back to the close, a bit like the Dow at the moment. Prices are also just becoming overbought. Watch the DP, watch all of the averages in between as well if we go to the downside. Suspect we're going to see a bit of a move to the upside to begin with to attack yesterday's high at 7 a.m. 5-minute charts, you'll see that yesterday we kicked off in the futures down, then we rallied back, and then when the cash market came in after being overbought, we then moved into an oversold situation and extended this when the market failed to become overbought again, stopping at the 20-bar moving average. before wending its way back to the 50 bar moving average and BRNs before coming overbought and oversold. And if we just move across here, once oversold, we rallied back, and then the market waited for the Dow and was just choppy all the way down, as you can see there, and then rallying back to that 50 bar moving average. You see how the averages held this market until the Dow moved and then headed north along with the DAX on the electronic session. Overnight, again in smaller detail, you can see we've come up to yesterday's high already. Market didn't like this and has come off that at the moment. Say in the 30-minute chart, you've got the DP down here, which in the 5-minute also has the 200 MA there as well. In the S&P, another cluster of volume there. We've got some stopping volume, 62% retracement. Certainly some buying coming in there yesterday. The market needs to hold here, but we still haven't closed back above the 5-bar moving average. Yesterday's move saw the S&P moving lower to the S1. Again, you've got your 89% retracement there with the momentum starting to shift, the market moving back to the upside. Yesterday's highlight, the Dow hasn't been taken out yet, but back to the close. And again, you'll need to watch these three areas in the morning session if the market does move to the downside. The UK FTSE has traded down to 78% retracement. Didn't recover as well as the rest of the stock markets yesterday, which is surprising. We are certainly oversold for this market. And in the 30-minute chart, you can see the move to the downside. We get the bounce back to the S1 and the BRN there of 7,200 before retesting and moving down to the S2. And the 7150 where the market then bounced off, and you can see there the market coming back to the close. Now what's interesting here compared to the other markets is that this one is nowhere near yesterday's high at this time, so going from the strength that we saw in this market compared to the others, that weakness has certainly taken hold, and maybe it's the cost of living crisis and interest rate increases coming and inflation that the market's now starting to factor this in. So yeah, amazing how far that is away compared to the other stock markets. Meanwhile, in the currencies, the yen still stuck in a range in the daily chart, but still making decent moves in the intraday market, which you can see they're trading down to the 161 level. I think it is. Let's just have a look. 161, and then the market put in its retracement with the momentum shifting to the upside despite pulling back and then trading up. We've taken out yesterday's high. The dollar was strong yesterday as well, and we'll see that in just a moment. The pound continues to move lower, as you can see there. Again, let's have a quick look at the 30-minute. Coming off the close, the 50 bar moving average and overbought. Switching to the red side, finding a bit of support, coming back to the S1, and then you've got the retracement there, and then down to the low of, let's just have a look at what we've got there. 140, well, 115 there. We've got $1.15 at this level, and then if we look at the monthly chart, we're heading down to that 114 that we've spoken about and looked at for many a week in this alert. And in the gold market, trading down to the 89% retracement yesterday, a lot of volume there as well, bouncing off this on the overnight, waiting for the non-farm payroll figures. If they come out at that 100,000 level that Goldman talk about, the magic number, then you will see this spike to the upside because the dollar will move lower, because then the Biden pivot will be back on the table. 30-minute chart for yesterday, well, you can see that we were more or less overbought, just getting there. We had a rebound and retracement, and then the London fix, you can't beat it, can you? ISM numbers as well, bringing the market down, but the moment back above the DP, waiting for these non-farm payroll numbers out later. In the Silver market again down yesterday. What a surprise. There's going to be no end to this yet, especially if those numbers come out higher than the 100,000 and the stock market moves lower. The dollar's going to rally, and you're going to see silver continue its assault to the downside down to about $14 per ounce. Dollar yesterday, big move to the upside. We have a new high in this market, which you can see there, 109, nearly 110. The high is 120 in this market, which goes back, I think, to 2008 or something. We'll have a look on Monday anyway. Well, speaking of Monday, as we get to the end of the market alert, the US markets are closed in observation of the Labor Day closures as well. And finally, we've got crude oil here as well, having put in its 89% retracement from this low to here, finding a bit of support yesterday and making its way back on the overnight. One thing I've forgotten again is yesterday's or this week's trades. You can see that we're up to 6 to 8. We've got 67.33 win-loss and a great profit factor of 4.1, which means the average winners to losers are 4 times greater there. Anyway, the market's focus is going to be on these non-farm payroll numbers today, so we'll be prepared. 1:30 I will be at my post to see what these numbers come out at, particularly the fact that Goldman Sachs have been out offering their opinion on what's likely to happen if they come out at far lower, particularly at the 100,000 level. Okay, that's it as ever. Thanks for watching. Have a great weekend, and I will see you in the next one.